Hey traders, welcome back to the 6th video of our 10-part video series where I will reveal simple yet powerful strategies tailored towards trading the Nasdaq and the micro Nasdaq futures markets. Again, the best part of all of these strategies are that they're meant to be accessible to everyone, whether you're a complete beginner or a more seasoned trader. Watch as I reveal easy to follow trading methods that you can start using right away without wasting your time hunting for opportunities every single day. Okay traders, for my 6th strategy, I'm going to be talking about my hidden gap reversal setup. Right now, what I mean by hidden gaps, you guys are probably all familiar with fair value gaps. In this case, I call them hidden gaps. Some call them acceleration gaps. Whatever you want to call them, they're all pretty much the same. It is a 3 candlestick formation where you get a gap between your first candle and your third candle. Now, during bullish fair value gaps, like I'm showing you on the chart over there, again marking out a 3 candlestick formation, there was a gap that occurred between the high of the first candle, that gray candle, and the low of that green candle. So the second candle was a long range candle that the indicator marked as orange, and that is a bullish fair value gap that occurred over there. Right, quite often price will reverse back into them, find support or resistance, which makes them really good trade locations. Now, during a bearish fair value gap, the indicator marks a long blue range candle, or actually marks it blue, and a gap occurred in this instance between the low of the first candle and the high of the third candle in the formation. This case forming a bearish fair value gap. Alright, so that in essence is a fair value gap, or as we call them, hidden gaps. But I want to see a sequence of events that occurred between 8:30 a.m. and the midday, just before lunch hours. So basically, I want to see a reversal occur during the morning session. Again, trading the Nasdaq. You can see on my chart, I also loaded my MACD divergence indicator, which plots bearish and bullish divergences. It's just another piece of the strategy that I need to see either bullish or bearish divergences during that time window, and when they do occur, I want to be trading in the direction of what that divergence has told me, as well as an invalidation of a bullish or bearish fair value gap. Now, to better illustrate this, there was actually a setup that occurred a couple of days back, and price actually entered into my time window, or my trading time window. There was a long range candle pushing all the way to the upside, and as it closed and the third candle started forming, remember that long range candle is going to potentially create a fair value gap. There was one that got confirmed by that rectangle, and at the very same time there was also bearish divergence as price printed a new high. Now, what I want to see with the strategy is actually price not finding support in this instance in that bullish fair value gap or hidden gap, and rather invalidated. If that does occur, that's generally a strong indication that a reversal is taking place. So again, that's why the strategy is called the hidden gap reversal setup. Price also broke below at that previous candle's low, further indicating that we might see a reversal. Now, the next thing I want to see almost immediately afterwards, or soon afterwards, is for a new hidden gap to form, or fair value gap, whatever you want to call it. In this instance, there was one directly after price invalidated that bullish one, right? In this case, creating a bearish fair value gap. Now, at the close of that actual candle, that gap was confirmed, but I was already starting to preempt if I want to get into a trade, generally for bearish fair value gaps at the lower end of that fair value gap. And if I would then to place my stop at the high of the first candle that formed that fair value gap, it would have been 132 ticks on the Nasdaq, which is just way too much risk for me to take. I like trading with 2 contracts. So instead of trading the Nasdaq, I head on over to the micro Nasdaq, and you can see price was already entering into that gap. So it gave me a slightly better sort of entry level with a slightly more reduced risk if I was to place my stop where I determined it should be. In this case would have been a little bit less than 132 ticks. Positioned my first target for 3 contracts at a 1-to-1 ratio, and my third target at a 1-to-3 risk reward ratio. All right, so Generally, what I like to see is as soon as my first target gets reached, I'll then start reducing my risk as soon as possible on my remaining contracts. In this case, I think about a half an hour it took for price to eventually make its way to the downside. And once price reached my first target for 3 contracts, I then start reducing my risk and trailing my stop on my remaining contracts to the downside. And it wasn't too long, price got very close to actually taking out my trailing stop. It eventually reversed lower again. I got even more aggressive with my trailing stop and eventually got stopped out. Overall, on the micro NASDAQ, trading 6 contracts using the hidden gap reversal strategy or setup on that day yielded just under $800 US. Not bad for a day trade with a very, very accurate setup that took place. It generally occurs during the morning hours, and like I said, I don't really mind going long or short, so I'm not too worried about what the direction is going to be, but as long as I do get an invalidation of a gap or hidden gap or fair value gap, as you want to call it, also accompanied by momentum divergence, then I will trade in that direction if a new fair value gap or hidden gap occurs directly after the first invalidation. And that's a wrap for today's 6th strategy video. If you want to see the remaining strategies in the series, then don't forget to subscribe to this channel and hit that notification bell. That way you'll never miss out on any of our upcoming videos. Also, if you want to get your hands on indicators similar to the one I've shown you today, then head on over to the link below this video and please check out our Ninjacators free Indicator of the Month Club. Thanks for watching, and until next time, happy trading.